Hi there, traders, and welcome to Trade the Structure. It's the morning recap from the overnight action in the US, and we'll just look at the previous action from yesterday in the Asian session, being in Australia. We'll look at the XJO, the ASX, and the rally into the Hang Seng. That was pretty strong on the Hang Seng. That was up 3.4%. You see on the index. So they might be a bit of a rough ride today. Might be some unwinding of some longs today, considering the US was down. A bit of a sell-off continues into the US. Now, what we've got on the screen here is the big S&P. So you can see the S&P 500, the broader market. So the market's actually popped up on the open. We're looking at 30-minute charts across the board today. Popped up in the open, but it gave way into the close. Some serious selling. It really accelerated the last hour or so, half an hour to an hour of trade right into the close as it broke a key level. So that would have been a bit of a stop hunt also. Triggers through a key support zone and just accelerated. People would have unwound. They would have been watching that level too, I think, coming into the last night's session. And if it was looking like it was going to hold up, they were fine. You could buy those dips, and it was buying a higher low, but instead it rolled over and really accelerated into the close. Now, that was probably driven again by the NASDAQ, by tech stocks. We'll look at the tech, and you can see that same sort of thing. So we're still, as we were speaking about yesterday, still looking to head into this support zone around 14,600, and that's a major support. We're holding lower highs into there, and it's probably the next key zone which needs to be tested. See how that plays out down there. See what happens. It is still on a daily basis, the longer term charts. The NASDAQ down, the S&P are still in an uptrend in a channel, but they're starting to look a bit more shaky at the moment. You've got earnings out at the moment in the US, which people might just be taking some risk off the table. There's a few factors. Obviously, we're still talking about interest rates. It's gone from, let's say, a couple of interest rates this year, rate rises this year, now to 4. It's a bit harder than they thought, so the markets are adjusting to that. Whether they've been factored in, they've probably been factored into the bond market, but I don't think they've been factored into shares. And it might be a bit of a, buy the rumor, sell the fact on earnings through these quarterly earnings in the US, which might continue to put pressure on our markets. So that was the NASDAQ. Look at the Dow. Dow's coming to this major support levels. You've got this zone in here, which it's just ramped into. So that really fell apart into the close also. Most of the damage was done in the last hour on all those three indices. Okay, and the Dow's coming to this level, whether that holds or whether it's going to look down to lower levels at 33, say 34,000, 33,980 or so, thereabouts, this one down here. Okay, momentum's down on both the longer term and the short term, so the weekly momentum's down, the daily momentum's down as well. It's really taken a bit of a hit. It doesn't help that we've got Putin playing around with Ukraine and causing a bit of kerfuffle and really poking the US bear. They love a bit of a war, so they might be really starting to poke the bear, and that's causing a bit of concern. So there could be a few factors, those and interest rate rises, a few factors that are weighing on the markets, continually weighing on the markets, and it might not be, like I said, we were speaking about this yesterday, more buying the dip. Who knows whether it's going to be more buying the dip or where is this dip ending? You don't want to be jumping in too early, because sooner or later the markets will turn. No doubt about it. They're going to come off their highs. It's going to be a massive profit taking, and you don't want to be buying those dips all the way down. You want to wait till those dips are proven. So you got something like this, a higher low. You want to let it get punched down, get a higher low, and then buy the dip there. That's the dip, not the dip in here. You're not aiming to pick the exact low. Okay, so for now, the market's still heading south. We don't know where the dip's going to finish, and that's pretty much the way we play the market. So we'll look at the DAX. DAX is just well, it was positive, but they shut early. So the sell-off was after that. So they'll open down, and they'll give up all their gains from yesterday, from overnight. They'll do that open down tonight. Same with the UK. Not much to look at. I mean, they look like they're getting a bit heavy, but still, that's an uptrend. Not too much to worry about just there. It's more the US we're focusing on, because that'll be led. Most of the markets will be led lower by the US, I'd suspect, if it's going to have a big sell-off, or whether we're just going to have a bit of a grind down, form a base, and go again. Okay, XJO from last night, which is the ASX, so yesterday's action. Now that's going to end up opening lower today. We're actually short that. Well, I'm short that through looking at this move down here. So that was the first expansion we moved down. We got over, I think it was the January period. Yep, just the start of January. It's popped up, retest fail. We call that RTF, retest fail there, double top, whatever you want to call it. Got the shoulder, beautiful shoulder. We got short that, and it's moving down. So we're looking to the 7,200 just at the moment, and see how that plays out to start with. And then from there, we'll just see what happens with it, really. See if that can continue a bit lower. If it starts to find a bit of a base here, we might take it off, take some off, but we'll see. But I think there's a good move in that. It's just that key level, whether or not that's going to hold up. I think it's heading down there, so that probably may not be too long if we can maybe head into that level today. We're going to look at the Hang Seng. The Hang Seng bounced really hard. That's a longer term, it's a longer term move on the Hang Seng. You can see this move down here. That level was broken. It consolidated a bit here and then just took off yesterday. So that was, algos really let rip yesterday. It was just a grinding higher. Any sort of minor pullback was just bought up. Any sort of selling pressure was bought up straight into. By the end of the day, it just kept going right into the close. The actual futures they got hit a bit in the US session, but nothing too major. Now we'll be interested to see how that opens, whether it does spike a bit higher and then we see some profit taking. But yeah, that was a very strong day yesterday. Now let's get over to, we've got some cryptos. Look at that 30-minute chart. That's your Bitcoins. Yeah, I still was really looking at that to see if it can pop up and start to rally again. But that sell-off from the US as that continues is really putting pressure onto cryptos again. That still, you got this bid zone coming through here, which it may hold up off, but we'll just have to wait and see. And it's sort of this level here that I was looking at. If we show that through there, I would have expected what I was really looking for there is this high low. I didn't want to see this power back into the support. So because we got no high low, what we call a shoulder, I'm stepping aside for now. It could just be more chop, and it could really just this sort of spike up, drag in some buyers, trap some buyers, and sell back into it. So you really just want to see what happens back, and if it powers back into this level around 40,000 or there, 40,800, 41,000, see if it can hold up. If not, it could spike through easily. Look for that retest, and you're looking to sell. Okay, Ethereum, much of the same. It's really powering into that support. It was that same sort of scenario. I was looking for something like that to really more of like this action, push up, something like that. But instead, that's not looking too healthy the way it's really smashed down, back down to this buy zone. Okay, over to our currencies and things. Gold, well, start with gold. Gold's actually had a big move up, flushed up. So I was still expecting some heat to come out of that market, but we'll see. The longer term is rolling, so that's more the daily, probably daily, 4-hourly momentum starting to roll. So I'm expecting some heat to come out of this move up. Maybe a test back into what I'll be looking for is a test back in the 1832, 1830 area, just to see if it can retest, hold that level, and go. And if we're going to get a shoulder, what I'll be looking for is, like I said, something like that. Come in and get that shoulder off there. It could be a buying opportunity because it's still longer term trend is up. Okay, and it's breaking a key level. That 1832, 1830 level was key for me. Just move this across actually, sort of in that zone. So if I can do that and pop back up, I'll be happy to go and jump in to get long and see how that goes. Go over to dollar, US dollar index. We were spoken about this yesterday. That looks like it was going to be bought back up, and it was. So that dollar strength continues. Especially, it's a bit of a safe haven as well as markets start to get hammered. I mean, that sell-off into the close on the indices would have been some safe haven buying into the US dollar, just driving that higher. So that's obviously driven the currencies lower. You can see Euro, smackdown, Aussie, smackdown, pound, all took a hit for that US dollar move. US yen has obviously got the opposite. You got the US getting bought up, but you got safe haven yen being bought as well. So it's more of a grind lower. Okay. Last few things I want to look at. So that was a dollar index. With the dollar index, I still think that's going to continue higher. Okay. Bonds, short-term bonds here. You can see that sort of cup there. It's whether we get through these levels up here or whether it's going to, just put a squeeze on yields, push the yields lower, or whether that's going to start to fail from here and start to press down again and yields keep popping up. Okay. But at the moment, most of the short, across the curve, the bonds have factored in those 4 rate rises. Okay, that's your 10 years. They're starting to pop up, so yields are easing there. It's a bit of an easing in yields, which didn't really help, but still talking about the rate rises. Okay, and then we've got oil. Oil really took a hit, flushed up through these highs and then took a hit, and that was mainly through the US session. I think they had inventories. I'm not sure what the inventories coming out at. Let me just take a quick look. US crude oil inventories come out more positive than expected. Okay, so it took some heat off the off supply. All right, then we got last thing I want to look at is just we got copper. So I was looking at this as a buy back in here, but we got smashed. We built this bit of a base. Now we just pushed back, accelerated back into these highs, and it's a sharp correction around that. It's basically when the US rolled over late in the session. It was going really nicely, and then bang, took a hit just then. So that trend is still up. You've got momentum still up in copper, and the same sort of as oil, but they've come in some key levels. Okay, so you've got this zone through here, which if it takes a hit off here, if we start to get a shoulder in here, then I'll be a bit more concerned. Okay, if we start to do something like this, that could be good, and then we could power back up through those highs. But if we start to get a bit of a shoulder in here, something more like that, then I think that all these long positions up here be built up could be squeezed out. Okay, that's pretty much it, guys. Thank you very much for joining me. And then we'll be doing this again on Monday. We'll just try to keep these morning recaps going, and just to see if there's any changes in the shorter term play, and if that extrapolates to a big change in the longer term on especially on the indices, on the as quarterly earnings play out in the US. If there's more pressure, or bonds keep changing, or if US dollar, all that sort of thing. We'll see if that keeps pressure in the markets, and to see if we could be in for a bigger sell-off into the US, or it's going to be just another buy the deeper correction and buy that dip. All right, thanks for joining me. Remember to take a look at the website, and we'll speak to you again soon.